am on a mission to build a stronger El Paso, one smart move at a time. So today I'm going to go over the basics of home buying because I hear a lot of people talk about how they want to invest in real estate and they have questions about how do we get started. And long answer short, the way you get started in investing in real estate is by buying your first property. So let's get started. The first thing that we need to take into consideration is there are several different types of methods that you could use to purchase that first home. However, if it is your first purchase, 9 out of 10 first-time home buyers are going to need some type of financing assistance, meaning most first-time home buyers do not just have the hard cash to come and buy a $250,000 home, which is more or less the median home price here in El Paso, Texas, right? So if you don't have $250,000 stashed under your mattress, how are you going to buy that property? Well, you're going to require a bank to loan you the funds. You're going to require some financing. Just like when you buy a vehicle and you don't, maybe you have purchased a vehicle cash, especially your first vehicle, because it's a lot more feasible. But with a home, it's not typically like that. So when a bank is looking at your file to see if they're willing to finance that money to you, whatever that loan amount is, and I'm just going to go with the number 250,000 because it's an easy number to do calculations on, and it's, like I said, more or less the average home sale price here in El Paso, Texas. So basics. What the bank is looking for is they are looking for your credit worthiness. So what does that mean? Credit worthiness. I think it's with an I. It might be with a Y. Don't judge me if I spelled it wrong. When I first started dating my husband, he had a very unique way of explaining credit worthiness, and it stuck with me ever since then. And very simply put, it is your financial integrity. Ouch. That hit me hard when I heard him say it like that. It's basically a like a report card, right? Of how we handle our finances. Do we pay bills on time? Do we borrow more money than we can pay back? Do we borrow money and then not pay it back? Do we make our payments late or do we make them on time? So that's that credit worthiness. Now, I have heard talks about there's not going to be a minimum score required to buy homes any longer. But just know that although they're not going to look for a minimum score, they're still going to look for credit worthiness, because this is how a bank deciphers whether you're worth the risk or not. Just think about it. Put yourself in the bank's shoes, right? Although it's a big entity, it's a business, they're not in the business of losing money, right? There's risk involved with lending anybody money. So think about it. If you were asked by your nephew, your niece, your son, your daughter, your sister, your brother, even your mom or your dad, if you were asked to borrow money, what would you take into consideration before making that decision? You would take into consideration how much risk is involved with loaning this person money. Do they typically pay back money that's lent to them? Are they typically late on their payments? Do they owe everyone and their grandma money? These are questions that you're gonna ask. So the same evaluation that you would go through in your head is basically the same evaluation that the bank's gonna go through in their head. You have to keep that in mind because one, you want to be honest about what your situation is. You never want to come into this buying process trying to finagle your way through, or how can I get through the red tape, or can I just omit this information? Like, no, you need to be honest about this situation. It's a big purchase, and it is something that it's a give and take, just like any good partnership. Okay, so I'll stop beating that dead horse. Credit worthiness, as of right now, typically the banks are looking for a 620 is kind of the magic number. If you're at about a 620 or above, you're typically pretty good to go. A lot of banks will go 580 or above. And now, like I said, with this news, I'm hearing that there's not going to be a minimum score. However, they're going to want to know that you are able to repay the loan. Okay? And this score, whenever they do look at the score, they are looking at the FICO, which is basically going to be the middle of the 3 scores, whatever your middle score is. So you're going to have an Experian, you're going to have a TransUnion, and I don't know, I'm forgetting the third one, but there's 3 credit bureaus. They're going to pull all 3 credit bureaus, and whatever that middle number is, that's the one that you're going to go with. If you are buying with a spouse, they're going to pull all 6, right? So 3 credit bureaus times 2, because there's 2 of you. And then they're going to look at the middle score, and they're going to go with the lowest of the middle score. So if your honey is 580 and you are a 600, they're going to go with the 580. Okay? The next thing that they're going to look at is they're going to look at your debt to income ratios, meaning how much debt do you have versus how much money are you making. So the simplest way to think about this, and again, these are super rough estimates. This is like when you're about to get started, you haven't really gotten started, you want to know, is it worth it for me to even talk to anybody? The ratio that they're typically looking for is they're typically going to loan you about 50% of whatever your income is. So for example, if between you and your spouse, you are making $5,000 per month, you're typically going to be able to get a loan of about $2,500 per month. Okay, that's what the debt maximum is going to be. Now, but hold on, if you have 2 vehicles, and let's say that one of your vehicles is, let's say that each of your vehicle payments is $500, so 500 times 2, we've got $1,000 worth of payments. Now we have to deduct that from here, and we are only left with $1,500 towards a monthly payment. Is that enough for you to buy a home here in El Paso, Texas, comfortably? It depends. We might be able to get you into a small house, but if you're looking for a larger family home, we're probably going to want this number to be closer to $1,800, maybe $2,000 for that monthly payment, okay? Now, the next thing that a bank wants to know about your financial profile is your employment history. They want to know that you've been making income consistently for a long amount of time. What's that amount of time? Typically, they're looking for 2 years. So 2 years of employment history. What if you had to take a break because there was some type of medical issue maybe? So, for example, maybe you took some time off because you were on maternity leave. There are exceptions to the rule. There's always going to be exceptions to the rule, even on the credit score and all that good stuff. There's always going to be exceptions to the rule. You don't want to focus on trying to be the exception to the rule. It's actually a lot easier for you to get into a home. It's a lot more streamlined and clear cut. if you just hit all of this criteria and you're not trying to be the exception. Why? Because if you are the exception, it might actually cost you more. So, for example, 2-year work history. Let's say that you went on maternity leave. I believe the rule of thumb, and I'm not a lender, I'm a realtor, so this might be slightly off. These are, again, super generic estimates of like more or less what we're looking at, okay? But let's say that I get somebody and they tell me, hey, I had a gap of employment from April to June because I had this medical thing happen, X, Y, and Z. They're probably gonna make an exception for you. And I believe the rule of thumb is a 6-month gap, considering that you're going back into that same employment or the same line of employment. You can also change your employment if it is an upgrade. So let's say that you are working at company A and they are paying you $35,000 a year, but you got offered a new job at company B and it's a $10,000 increase annually. And so you're switching over and you're like, hey, Denise, I've only been at company B for 6 months. That's okay because it was an upgrade. So long as together you've got those 2 years of work history. I hope that makes sense. So this is the super basic of what the bank is going to look for. If you're a little unsure, if you're kind of borderline on any of this, I always recommend that you talk to a professional, talk to your realtor, talk to your lender, because it's only going, when you go through the actual application process is when they're going to be able to really dissect your file, your financial file, and see what exactly is there. What's there, what's not there, what's missing, what do they have questions about. And just know that the lender is in the business of helping you get your loan approved. So just like I tell you, be honest with me, be honest with the lender. We don't hide things from the lender. Their goal is to get your loan approved so that you can move on with that home purchase. Aside from this, I think the one other thing that I want to touch on as far as if you are ready to purchase a home is, have you rented before? Have you been on your own before? Because I do get some clients that are a little younger and they've never lived on their own before. I'll be honest, I don't know how every other realtor does it, but I typically recommend that you rent for a little bit, at least a year, before you jump into purchasing a home, because it's a huge change and it's a huge commitment. And I think it's worth it for you to go through the process of, just living on your own and understanding what it's like to pay bills. What is it that these utilities actually cost you before you jump into this long-term commitment of owning a mortgage? I think it's worth the 1-year wait. So that's the first thing. If you haven't lived on your own, if you haven't been financially responsible before, it might be a bit too much to go from living at your parents' house to buying a house. Again, there are exceptions to the rule always, but general, no, I would say probably rent for at least a year. The second note that I would make is if you are struggling financially, like if you are living on a paycheck to paycheck basis, and you have a good rent payment right now, and by good, really anything $1,500 or under is pretty good. I mean, we're not really getting a whole bunch of mortgage payments at $1,500 or less anymore. Unless you're coming in with a large lump sum, that's just not a monthly mortgage payment that you're gonna see. So if you are paying $1,500 or less and you are already struggling, it might not be your time. Okay, I would definitely recommend figuring out how to increase that income, maybe getting another stream of income, but don't get into a bind over, becoming a homeowner if you are already stretched. That being said, I will say that becoming a homeowner does stretch you, and it's supposed to stretch you. There's gonna be growing pains there. But these are the conversations that I really take serious with my clients when I meet with them, and hopefully I'll have an opportunity to meet with you and we can talk about it a lot more in depth, because everybody's situation is a case-by-case situation. But I really just kind of wanted to break down, like I said, the basics, the absolute basics of what a bank is going to look for in order to loan you the house. One more thing that I want to throw in there. Not only do you have to qualify for the home loan, but the house itself also has to qualify for that home loan. So there are tons of loans around. You can get a hard money loan where you can do a fix and flip, and you're gonna see all these things on TikTok and YouTube. For first-time home buyers, you are very likely going to end up with an FHA or a conventional loan. Here in El Paso, 8 out of 10 of my first-time home buyers end up with an FHA loan, because it is a little bit more laxed when it comes to the requirements. They offer the down payment assistance and all the things that the first-time home buyers need, okay? It's a great loan. Take advantage of the loan. The VA loan also, it's a great loan. Just know that if they are loaning you money, the bank's loaning you money to move into your primary home, a home that you're going to live in, the house also has to be in livable condition in order to qualify for the loan, okay? So this is, again, where your realtor comes into play. You might be sending them properties and like, hey, I don't mind doing this fix and flip project. And your realtor might be like, that's not gonna work. It's because there's still certain requirements that the house has to hit in order to be finalized. And they don't want to put you in a situation where you are going to possibly lose money during that due diligence process because the house didn't fit the criteria. So I hope this all makes sense. I look forward to hearing your questions. If anything doesn't make sense, or if you got anything out of this video, or there's any questions that you would like for me to answer in the future, please put a comment down below and I will gladly work on that as soon as possible. I hope you all have a wonderful day, and as always, remember, smart moves plus strategic investments equal rich rewards. Talk to you soon.